Imagine a world without money. No shiny coins, no paper bills, no digital balances. Just people trading cows for salt and salt for clothes. For thousands of years, this was humanity's reality, a world ruled by barter. A slow, fragile, and deeply inefficient system. Trade depended on something rare, a double coincidence of wants. You needed to find someone who had what you wanted, and wanted what you had. A farmer with eggs might search all day for a shoemaker who actually wanted eggs. Commerce was limited, trust was local, progress was slow. Humanity needed something universal, a language everyone could understand. We needed a medium of exchange, a unit of account, and a store of value. The first solution appeared in the form of commodity money. Objects with intrinsic value, like shells, salt, cocoa, or metal, became early currencies. But how do you divide a cow? How do you transport sacks of salt across long distances? The answer was metal, durable, divisible, and rare. Gold and silver emerged as perfect stores of value. They were beautiful, scarce, and didn't rust with time. Then came a revolution in ancient Lydia around 600 BC. Under King Alyats and his son Croesus, these coins were made of electrum, a natural alloy of gold and silver. For the first time, value was guaranteed not by weight, but by authority. The king's seal meant trust. The coin was worth what the crown said it was worth. Trade flourished. Empires expanded. Money had become a symbol of faith. Centuries later, a new problem emerged: weight. Merchants in China faced the burden of carrying heavy metal coins across the Silk Road. To solve it, they began using deposit receipts, proof that their gold was stored safely. These slips of paper, called flying money, were the world's first paper currency. The Chinese government soon adopted the idea, turning private notes into official money. By the 11th century, the Song dynasty had created the first state-backed paper money. When Marco Polo saw it, he could hardly believe it. The Great Khan's empire ran on paper, money made of nothing but trust. Europe, still tied to gold, dismissed the idea as madness. But eventually, the concept crossed west, and it changed everything. Paper notes spread through Europe in the 17th century, giving rise to banks. At first, banks simply held gold and issued notes redeemable for it. Each note was a promise. This paper equals this much gold. But then, bankers noticed something powerful. Most people never withdrew their gold. There was always a reserve sitting idle in the vaults. So they began lending more money than they actually had. Fractional reserve banking was born, and with it, modern finance. Banks had discovered how to create money from confidence. Credit, investment, and growth exploded across continents. But so did the risk. When trust vanished, the system trembled. If too many depositors asked for their gold, panic spread, and banks collapsed. For centuries, the gold standard kept the system anchored. Currencies were tied to a specific weight of gold. Governments could not print freely. Fiscal discipline was law. But war and ambition demanded more money than gold could supply. In 1971, everything changed. U.S. President Richard Nixon ended the convertibility of the dollar to gold. The world entered the era of fiat money, value by decree. Now, money was backed only by trust in governments. It was no longer a thing. It was a belief. This unleashed a flood of liquidity, inflation, and speculation. But it also powered an age of prosperity and global trade. Money had become completely abstract, numbers moving through networks. Today, less than 10% of all money exists in physical form. The rest is digital, bits of data traveling at the speed of light. Banks, governments, and algorithms now control the flow of value. Yet once again, doubt began to rise. After the 2008 financial crisis, trust in banks collapsed. In 2009, a mysterious figure named Satoshi Nakamoto proposed an alternative: a digital currency with no central authority, Bitcoin. It was money based not on gold, nor governments, but on mathematics. Every transaction was verified by code, not by bankers. Decentralized, transparent, and borderless, the promise of financial freedom. We had come full circle, from barter to metal to paper to code. Each form of money built on a single foundation: trust. Trust in kings, in banks, in states, and now in algorithms. The story of money is the story of civilization itself. It's the tale of how humans learn to believe in symbols. From seashells to blockchain, we've always chased a shared illusion of value. Money is not real. It's a collective fiction we agree to believe. Its power lives only in our shared faith that others will accept it tomorrow. The question now is, where will we place our trust next? In governments creating digital currencies, or in decentralized networks? The future of money will depend, as it always has, on one fragile thing: belief.